Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see how they all look today. It's kind of like sideways quiet, nothing major. Um, we see the over there on J4X, you can see that red in the hinky ashes now for 6 days. See the white line moving down, but coming into a bottoming range now, down at the lows. This new indicator we've been paying attention to, we're giving it a couple days just to watch and see how it acts. You see it's just a little peak here, I guess, but it had been moving down, so there's not a lot into it at this point. You can see the real peak was here, so it missed that move. But as Kelly comes in today, we'll ask him or her how to read this particular indicator. I set it up on there. I'm not even sure if I have it set up right. Now when we go over to Chicago Quant, you can see over here, where's that mouse at? There it is right there. You can see just they popped it up a little bit here this morning. There's a lot of red, just like the hinky ashes on J4X. You can see it's above the range for over a week now. It's going on a second full week of over the range, which is curious. 1, 2, 3, 4. Is that 1, 2, 3, 4? 1, 2, 3, 4, 5, 6. Yeah. So this is 2 full weeks now. 10 days of trading above, and we're in that daily sell right here. We were thinking that it might come back down to, say, the 50 percentile, but so far we're not seeing any confirmation, especially with the weekly here. You see that weekly is showing a lot of strength. So we're not getting that true weakness that we were hoping for to get it back into the range, which I guess the debate now is, how do you look at the old range for a new range because of the inflation? I mean, interest rates are rising, so they must have to raise the range on some level because interest rates are rising. And so that is one of the curiosities that we're watching at the moment. We're trying to figure out how they will do that in the end, and I would imagine that is going to be the answer to it all. Let's see now, where are we at? That's not that. No. Got to get over to the webinar. Let's find the webinar. Let's open up the webinar on one of the machines here. See if anybody's asking any questions yet. All right, like that. Nothing yet on that. Okay, there we go. Let's click on that. Oh, it's in trading. That's where it's at. There it is. There we go. Let's kill the volume on that. There we are. No questions, so that's good. We're not missing anybody's statements, questions, or good mornings, or afternoons, or evenings. All right. Now, what is that all about? Is that doing the same thing as the other? Well, maybe I have to sign in. Maybe that's what it comes down to. Subscribe. There we are. There we go. Okay, we're signed in, and we see nothing up on there. So let's just keep on exploring. The markets overall across the planet, the last 24, 48 hours, I guess the last 3 days, they've taken them up, or they've taken them down on Monday, took them up on Tuesday, took them down on Wednesday. Today's Thursday, I guess. So they took them down on Wednesday, and now they're trying to take them up. Mr. Biden is in Europe right now. He's visiting y'all. They didn't let him speak at the conference, but I'm really glad they didn't. They need to let the NATO leader speak instead, and just let Joe Biden shake his head yes. And this way, Mr. Putin might realize, oops, he's not my puppet anymore. He's their puppet. I think that's pretty much the way it's looking at this point in time. I guess you have to say that pretty much all these pairs trades and the dollar, they've stayed very firm. I guess that's that flight to safety. The Swiss, you can see, has been trying to move against the dollar up in here after they've seems to have found themselves a whole new range area. We're going to see how this plays out. I have a hard time believing that that's going to be the bottom end of the range. I would think that this would be here, the 50 percentile from the old range. Just for the adjustment. They could. Markets always like to anticipate future moves. They say buy the rumor, sell the news. And so with interest rates rumored to go up, and they already raised them up a quarter, there's serious talk of a real half-point increase along the line here, which would be really great. They're probably going to push them up into the 3.5 area, something like that. 2 3/4, 3 1/4, 3.5. I'd imagine that would be the area where they would try to push it to, and then from there, and the logic behind. Let me just stop there for a second. What would be the logic to not go to 7, 8, or 9%? And the answer is that I don't believe this inflation is here to stay. I don't see this as the deadlocked 70s, where it took off after they disconnected the dollar from gold. Richard Nixon did that, and I don't see that was a catch up right there alone. They had to catch up. The inflation had to catch up from past years, especially with they allowed the interest rates to float. Now we have quantitative easing, so they're not going to let the interest rates float again. Now they did a type of quantitative easing from the 1933 all the way up to 1972, where they had the 30-year locked in a range. Didn't matter what was going on, they locked it in a range. And so when he disconnected the dollar from gold, at the same time they allowed interest rates to just float. And that basically was part of that inflation of that era. Then, policies by the government itself as the years went on made it even worse. And then the oil shocks of the late 70s made it even worse. And so when Mr. Reagan got into office in 81, that was the top of the interest rates, top of inflation. And so I kind of think we're going to see something like that very soon. I think that we're going to see the interest rates move up a little bit to show that the Federal Reserve is participating in defeating inflation. And then I think policies are going to change, and we're going to see energy released in America. They're going to let it start producing again like they did under Mr. Trump, where we were a net exporter, not an importer. We were energy independent. And I think that'll come back, and that will calm the inflation. And so I think that the Federal Reserve is not on the warpath where they think they have to raise it to, 7 or 8% or 10%. Though if they just raise it a 1.5% to 2%, it'll show that they're participating in fighting inflation. And I think that's really where we're at. All right, now let's take a look at the euro. See what the euro's up to this morning. It wasn't a daily sell the last I saw this morning. There it is right there. You see 4 days of red, the white line breaking down. Over here, let's see, where's it? Right there. There we go. There we are, seeing the same thing. We have 4 days of red dots. You see we've been in a daily sell since here. And it's been just a leaky type of action. You can see the weekly does not have any desire to climb up. That means longer term money week to week going into month to month has no interest in really buying the product at the moment. And I would imagine once they get to some clarity about what they're going to do with the Russian Federation, or Moscow in particular, how that is going to end, or how they're going to stop the killing and the invasion, and all the stuff that's going on in the Ukraine, then I'd imagine we will see a much more firmer euro at that point. Jobless claims lowest since 1969. Wow, those numbers are kind of interesting. Continuing claims lowest since 1970. But they were a slow economy at that point. February durable goods came out, and it was 2.2 down versus an estimated half a point. So durable good orders, I guess. Goods and ex-transport. Okay. So we've had some real action numbers, and we're not seeing much action in the stock market out of it. And we don't see the currencies jumping around too hard from it either at the same time. All right, now what else can we say about euro? I guess we've kind of resolved where we see the euro today. Stuck in that neutral slow slide. Now we'll jump over to cable. Cable's just about unchanged from yesterday. Holding on firm. You can see we're still in a daily buy right here. Just widen that out a little bit for you. And you can see the weekly is, they're trying to take the echo of the GAS 5 part of the 3.5 Super, and they're trying to get it plus, but they're not doing too good a job at it. And let's take a look at it on J4X. There you are. You see it's trying to roll over. We're at the very high end of the range. And that itself is telling us that, that you can see the red, popping out there, on the hinkies, on the bar itself. And what else can we say? Oh, there we go. I was looking for something there. And so what we have is, that's my chair making a squeaky sound. What we have there is we have the market in the cable pretty firm. But again, here we are again looking at the same situation, as that the weekly just doesn't have any strength in it. So longer term money at the moment is really parked to the side. It has no confidence. I mean, that's really what it comes down to. It has no confidence at the moment. And so as long as there's no confidence in the weekly at all, showing any real life in it. Now, in this case here, this is in a daily buy for 6 full days, isn't it? No, it's going on a 7th day now. It's holding up, not really going anywhere particular, riding the bottom end of the range. But I guess you could say that, as long as, the European situation, we're on our 29th day now. So of the center of Europe is at full-fledged war. Oh my God. It's so hard to believe. Not since the Soviet Union in the 50s have we seen stuff like this. So, and our vice president, I think she was over there, and she said something like she hadn't seen it since like 1945. So anything's possible. So take your choice. Maybe the Hungarian, all that it didn't happen. It was some type of dream, at least in her head. All right. From there, we'll go over to take a look at the Turkish Lira. Right. There it is. There's dollar Turkish Lira. And this thing is just banging on the top part of our big giant rectangle. Just banging on it. You can see still in the daily buy. Still in the weekly buy. So there's a lot of strength. And I guess you could say there's buyers. That's for sure. I don't know about the strength as much as it's just a lot of buyers. And then what we do is we jump over to the Euro Turkish Lira, which we find to be the more, accurate type of thing to watch. And let's put that up there like that. Right there. You see mostly green, and a little curving down right now, just like we have over here. We flirted with the daily sell yesterday, and it's, matter of fact, we should have a line in there. It closed in the daily sell yesterday, right there. And now it's back up to the zero line again, I guess. What does that say? That says minus 0.0026. So it's just still underneath the line there. It's staying inside its big rectangle, and we haven't challenged the bottom end of it. Now we're just been slowly drifting back up to the top end of it, and that's the new range we think we think has become established. I talk about it a lot. The fact that they're giving out free puts or put options. When you buy the Turkish Lira, is a smart way of bailing yourself out. And it just becomes a much more smaller. Imagine if they'd done that. I've said this before here. Imagine if they'd done that and had eaten up all their sovereign fund back in yesteryear, and then basically spent all their central bank's reserves to prop up the currency. If they had done this with the free put, their economy would be much more stronger. And it's getting, obviously, with the currency now stable, it really opens the doorway for foreign money to come in and stay because of the free put. All right, so there's Turkish Lira. From there, we drift over to the Canadian, right there. The Canadian has just been parked there for a couple of days now. Been in the daily sell since here. Still in that weekly sell, so that's a positive thing, because when the Canadian dollar becomes weak, or it heads down, it means it's gaining value against the dollar, the American dollar. There it is on J4X, same thing, lots of red, little bounce trying to perk, just like ours is trying to perk right there. This is trying to perk right there. So let's check and see how the sound's doing. Yep, I hear the sound. Okay, good. Excellent. So from there, usually when the Canadian currency against the dollar is heading down and getting stronger against the dollar, normally that is a representation of buying in oil. So let's take a look at oil. So let's check out the oil. Wow, this is a squeaky chair. I gotta grease it. Let's see what's going on there. Yes, right there. Let's go to there. Oil. And there it is right there. There's the oil. See, it's pretty much unchanged, hanging out up in here. We were looking, the 2/3, was it the 50% move? Was it 50% move from 131 to 93.7? That's 38. And 19 is the middle. So that would be 12-ish. So we're above the 50 percentile. And the 2/3, so 38, broken up into three sections, basically is 13 almost. It's like 12 and 5/8. So see, 36 to 30. Yeah, so it's basically it's 13, so it'd be 26. So 26 from 93. You add the two together. So let's see, that's basically 26 plus 93 is 119. So maybe what we'll see is, you can see it got up to 116.64 there today, Maybe it's going to inch along, try to get to the 2/3, and then maybe they'll start to roll over. Now, our weekly is strong, so I don't expect a lot, of selling. But again, imagine if they could convince Mr. Putin not to kill as many Ukrainians as he's been doing, just reduce it down enormously, that would be a good thing. And so the Canadian is moving down because normally it does that when, oil is strong. Now, let's take a look at gold. I noticed silver and gold are getting a little wacky in the sense of gold was moving up and silver seems to have gotten choppy. But let's just take a look. There it is right there. And so gold went into a buy after 11 days in a sell from there, from up in here. And our weekly is plus again now. So we can actually remove that cute little circle for the moment and put that up top there above the 0 line. So we're seeing it climb out of that. You have to assume that there's going to be flight to safety. I mean, they run to the dollar for safety. They'll run to metals for safety. There's a big question mark in the financial industry in general, is that you've seen how the Russian assets investments have fallen apart altogether, and crushed any money manager that was investing in there. And now the concern is China, basically, because if China is kind of trapped, as much as China tries to show a strong face. They've got about $1 trillion invested in U.S. Treasuries. They have nowhere to put it. If they go and start to buy gold with it, they may drive the price up $300 or $400, and then find themselves sitting losing. And then, in other words, the gold might fall back down to right where we are now. And then, the only safe haven for them is to have their money in dollars. So it must be like a very angst type of situation. At the same time, if they dare to support Mr. Putin's war, then they're going to get sanctions on them. And that hurts because the United States is 70-some-odd% of their exports. So if they lose that, then the world is not going to be able to step up and buy. Maybe they could step up. I would guess the world could step up 10% or 15%, but I can't imagine taking over and buying 73% of what they export. I don't see that happening. So China is really trapped in the sense of they would have been better off of being kind of quiet and strong and changing their infrastructure so they weren't so dependent on America. But instead, they seems to back themselves into a wall. And so that's going to be very interesting. There's money managers out there saying, the ones who invested in Russia have had their, they should be fired, because they've lost, enormous amounts of asset value. And now the question is, same thing with the Chinese situation. It's bad enough that the Chinese market is still 50 or 60% off its all-time highs. So it's not like the rest of the world that's been relatively normal, where they go up to all-time highs and hang out and they're just a little below it at like 10%. The Chinese market is some crazy number like 58%, 62% underneath its all-time high. So the pairs trades, I guess, are going to stay firm the way they are because of these reasons, and they can't rush in and buy gold or silver because they may have to overpay enormously, and then when they want to get out of it, they have to sell it again. And selling 15 or 20 or 30 billion dollars worth of gold could crush the market, and then in other words, they're hurting their own investments. So they're stuck. The only place they can be is in dollars, where they're guaranteed to have their assets returned to them. Now, unless they join in and fight the embargoes against Russia. So interesting times there for poor China, as usual, as we say around here. That they are not what everybody thinks they are. All right, let's just take, from gold, we go over to the South African rand, Let's see what they're doing with that. And since gold has been trying to climb up, and the weekly has got out of the weekly sell at the moment, and is trying to climb back up also. Let's see what South African Rand is doing. Right there. And it's doing what it should be doing, and that is going down in value now because gold is up. Now let's do this. Let's just minimize that. So now let's jump over to South African Rand here. Yep, moving down still more, which kind of usually gives that signal. I forget who, we used to have one webinar, the person that came in, and they would be like, yeah, this analogy or this integration or this characteristic where gold and the South African Rand is more locked together than I realized, he said. And it's like, yeah, it's part of it. They're the biggest exporter in the world. So, they gotta, it's got something to export, and do. As much as South Africa is a strong nation in Africa, to get it back up to a strong international level of the old days, they have to get their economy back on track, and gold is the main theme of it at this point. Let's see. So you see South African Rand. It's been in a weekly sell for since the middle of December, and it's tried a couple times to get going, as you can see, right in here. But it still can't get through that zero line. And then, let's see, right here. Boy, they looks like they've got a harness on Joe Biden, the head of the NATO. Looks really great. I'm glad. He would only hurt the situation if he talked. It's just better for him to nod and say yes, and I'll write the check, things like that. All right. So from there, we normally went and looked at the ruble. We'll just take a quick peek at it, not really try to analyze it. As Janos was saying to me, that right now they're not involved in it. You just see it right there, kind of going nowhere. All right, let's take a look at the yen. Yen just keeps on climbing up. We thought it would stall out in this area here. We've got bullish in this area there. So, until this thing starts to show some turning, I mean, look at it. It's in a daily buy since we wrote that article. And it closed in the weekly buy. It was, all guns blazing, be long. Look at that. This means that the yen is weakening against the dollar too at the same time. So this is an inflationary move, and it's not exactly backing off. I mean, we've gotten up to 120, almost 122 now. So it's basically, these were the 5-year highs right there, and then right there again, and then the third time was a charm. All right. Last one we go to on the pairs trade is the south of us, the Mexican peso. Right there. So you see they're going towards the bottom end of the range. That's a curiosity with interest rates shifting, and that's moving back in its range. Just the way cable and euro are staying with their ranges. And what else can we say about that? I guess not much at this point. Just it's a good thing to see it calm down. The weeklies, just look how soft that is, and look how tight that's gotten. It's very close to the zero line. Flirted with it there, playing with it right here. It really is. Let's get rid of that. Remove study. There we are. It's really fighting to. I know it's contracting. I'm trying to think the last time we saw it contract that tight. There you go. Right before that, Mr. Biden's This was Mr. Biden's summit that exploded it up. That's why we have a big oval around it. And I guess there's uncertainty, so that it's tightening and tightening and tightening. See, when's the last time from there? Not many times. There's one there, but that's back in what? 2020. All right. That finishes our pairs trades, unless someone wants to see something. And then we'll just jump back to whatever you would like to see. It's a quiet day. What's this? Today's Thursday, right? So everybody is, I guess, might have been an exciting week for some. The 10-year I'm seeing is yielding 2.37, basically 2.367, but I'm rounding it out. 2.37 now. Interest. Right. So there, what we'll do is we will drift over to the metals complex now. Yeah, there's the Mexican peso on J4X there. Bottom end of the range. Now let's check out gold. There's gold. It's been moving up for days since this sideways stuff going on. Let's see. Over here you can see the same thing. You couldn't really, the good thing I guess you could say with gold, at least it stayed in this buy. The weekly buy has been in that buy since back in the 1850 area. So it went to 2070-ish. What was that? 2078, $2,000.78. So it was a nice $200 plus move. And it seems to be resting in the 19s at this point. Now let's check out silver. Right there, there's silver. Perking up again. We got a green today developing after all this red. It's going into the sell, back into the buy again. Now, let's take a look at it here. And so it almost got into the buy yesterday and failed, and now today it's trying. You can see that right there. It's look at it. It's just 10 cents over the line. It's pushing, and this is going on a fourth week in the weekly buy. I don't have a lot of, you would, I guess, like I said, there's a real conundrum for all the big players in the world economy with the metals and buying U.S. dollars, and I guess the dollar is the product they would love to hate. That's what it comes down to. As much as it's a good product, and it tries to keep the world stable financially, it is the product that they would like to hate. I guess it's because of the freedom we have here. And so they you got to look at it like one of the top competitors against it is a communist dictatorship. After that, the socialist countries, social democrats, I guess you call them, with a flavor of socialism and capitalism, and just all kinds of odd situations going on there. So I guess when you look at the metals complex and everybody says, oh, why don't they just sell those dollars and buy metal? It wouldn't be that easy for them to move around $1 trillion of gold. It would be a real fiasco. So I said that about 10 minutes ago. It's you look at these metals, you see their actions, and you just kind of just know that it's like a Bitcoin in many ways. It's a place to go to, it's an asset that's respected, but in the end result, it has its own nature to it. And it's not a currency. So imagine if Bitcoin was really a currency. An international currency that didn't have such great fluctuations. Can you imagine if something like China had tried to put $1 trillion into it and get out of the dollar, and they round it up to say 120, instead of just dying at 70,000, and now it's trading at 42,000. They don't see that type of volatility when you're long dollars. That's why they're kind of trapped into loving it and hating it. Loving it and hating it. They love how they can buy it, and their assets pretty much stay there. And they make a little money from their assets being invested in it. And at the same time, they hate the idea of freedom and democracy and democratic republic type stuff. They hate all that stuff. They're more towards a couple people control the whole society type thing. So when we look at the metals complex, that's what it's screaming at us. It's saying, we're confused. We are confused. Now, there's copper. Now, that's an industrial metal, but, in these times, all assets, all metal, anything semi-precious or almost precious, has, a buyer. It's a place to run to. At the same time, copper is needed in different industrial ways. All right. From there, we'll go take a look at platinum. We really think, and we're always saying the same thing. I wear that one out, as I think that platinum is a leader in some way. It's just not representing it. But at this point, they have it in the weekly sell, and it looks like, did they put it in? It's been a daily buy there. Have they put it in the daily sell yesterday? Yeah. So it closed in the daily sell yesterday. As you can see there, oh no, it's the wrong spot. There it is, right there. And that's what you see right there. See, it's minus. It closed at minus 47. And so it closed in the sell there, yeah. So in other words, the green line histogram were minus below the zero line. And the weekly, it was so close, and it's tightening, and it's actually underneath the zero line. This went into a buy. Literally, I guess it was before gold by a week or two. Let's just see gold. Yeah, so gold went into the weekly buy in mid-Feb. Was in a buy in December that's when platinum went into a buy, and then it went into a sell, gold, back in towards the end of January. Whereas that's gold. Now the platinum itself, which I think is some type of leader, but not, it's not showing it price wise. It went into the buy in late December and never went into the sell at all throughout this whole thing. What is that all about? Let's fix that. Yeah, so it's to me, I thought it was kind of trying to tell us it's the leader. And when you look at this pattern here in it, it's almost like a reverse head. It's a head and shoulders, not reverse. It's a head and shoulders. And it's on an angle. It's very weak. Again, this is all moot. In other words, this won't mean a lot if the war in Ukraine gets worse, in Europe in particular, if it starts to get worse. And that's part of the challenge here now, is to see how they play this, and if they find a way to get out of this peacefully, not viciously. All right, that's the four energies. Let's go over to the. That's the four metals. Let's go take a look at the energies now. And there is spot oil. It's dropped below 114. We were watching that earlier, and it was up as high as 116 and change. Still in a daily buy here and a weekly buy, and this thing's been in a weekly buy since that move in gold. Everything was obviously picking up on it, and it has never gone into the sell. All right, now let's put it up on. We didn't look at the copper. Let's just see what copper looks like on J4X too. And see, it's drifting a little underneath, but lots of green, so no real selling. All right, now let's drift over to crude oil. Well, there's Brent. Since Brent's right there, see, Brent's trying to turn over. It hasn't taken out its wild and woolly February highs yet. And then over here, that's our spot. Let's go take a look at the back month. There's June, and it's trying to roll over. Just the same way J4X is trying to roll over here. And again, you know, we have the caveat, oh, guess what? There's a war in Europe. And we just follow the math. In the end result, the math will lead us out of this. It's like leaving breadcrumbs. From there, we'll jump over to natural gas. There it is right there in the States, natural gas. And let's show natural gas right here. There it is right there. You can see natural gas has been in a buy for 6 days now, holding relatively firm. You can see over on J4X, we've got 7 days of hinky ashkies in a green, and the stochastics is trying to roll over just like our green line and histogram are trying to roll over right here. And the weekly, not really caring at all about rolling over, just looking very, very, very firm. Let's see what a weekly looks like on natural gas over on J4X. Okay, so you can see there, it's turned up too, made the same curves as our weekly has done, right there. And we got the green going on for a bunch of days here, or a bunch of weeks. This is weeks now. And in this case here, we've been above the zero line for a while, and has not. Whereas here, it tried to go into a sell, but just failed at it. Now let's take a look at European gas. Right there. 25 now. Remember, we were watching it at 22 and 23, and we were hoping that when it drifted up to 24, we thought maybe it'll drift back down again, but I guess there's no room for that until they find a replacement for natural gas in Europe. Alright, so let's see. There's a nat gas there and a nat gas there. Now we're looking at European on the J4X. Nice curve, huh? I guess it's that uncertainty thing. And there is the beginning of the war right here. That's kind of interesting, isn't it? It kind of backed off after it spiked from the beginning of the war. And that's January. Right there, I guess. That is early February. And we're on 29 days. Well, maybe they're going to figure it out. Supposedly, Mr. Biden is over there. He's going, supposedly, yes, the key word there is supposedly. He's going to introduce the idea of American natural gas being shipped to Europe. And that could be overall holding it down. All right. From there, I guess that's it on the energies. Let's do this. Let's take a quick look. I just saw Bitcoin. Where's Bitcoin at? There it is. Let's take a look at Bitcoin. We'll go over here and look at Bitcoin. We've been observing the characteristics of this, crypto for a while now. For a couple of years. And obviously, you would have thought if you're in the middle of Europe and you have a major invasion going on with a major military power, you would think that thing would be trading at 75 or 80,000. But no, it's in the beginning it actually started to fall, which was really strange because here was where the invasion was. Oh, and we need to put that up on as a daily. So this is where the invasion, where's that mouse at? This is where the invasion started. Is that it? 17th? Or was it the 23rd where the invasion started? Something like that. And then it gave this crazy swing. So I guess it was like right there and swung all the way down, made new lows in the 34s. Was it 34s? Yeah, 34,000. and then showed the strength. And then during the war here, it's come back down and tested lows, and it was a higher low. And now you can see we are challenging, some higher areas we haven't seen for about 5 months, 4 months, 4 months. There's January, like 4 months, 3 months. I'm sorry, 3 months. All of Jan, all of Feb, and now almost all of March. And as people who follow the cryptos look at it, they think, well, maybe it could be a great alternative for the Chinese, or it could be a great alternative to others. But I don't see that. I just see it as another unique asset class. But I don't see it having maybe it'll have to get years and years of investors in it for it to show characteristics where it's able to be totally independent of the rest of the market. And in my head, when someone says they don't want to buy dollars anymore, but they want to invest in something else, I think of cryptos. But the problem is that it's one thing to do it with a few million. It's another thing to do it when you're trying to do it with 50 or 60 billion. That's a lot. And definitely with $1 trillion, you would be the market. You would be the bid. You would be the offer. And then after you're done buying, then what's going to happen. They're going to find a way to sell it back down again, to buy back what they sold. And so that's not something that the Chinese government is willing to take a risk on. Is take $1 trillion and find that a month and a half later, it's only worth 750,000 billion. Billion. 750,000 billion, or maybe only about 800 billion, and lose $200 billion, I think they'd be enormously distraught. All right. So from there, we've done the energies, we've done the metals. Let's take a look at the stocks. And you can see there, June contract is plus. It stayed in daily buy. The weekly buy is firm. And so they're doing a pretty good job here, holding up. And that's the NASDAQ 100. Let's put it up over here. U.S. Tech 100 right there. Now we're getting a little curve there, but we still have all those greens. And we're at the high end of the range. Look at that, 792. My old clearing number, 792. It always seems to pop up. It's always interesting. Let's see, what else do we have here? I guess that's about it when it comes to the action in the Tech 100. Stocks are the place to be at the moment. They can fight inflation at times, especially when they're able to raise prices. Not a lot, just have to raise a little, 2 or 3 percentage point here, 2 or 3 percentage point there. Now from there, I had one more thing I wanted to say during the energy, and I was thinking about it, and I didn't bring it up. I wanted to say it a couple times. When looking at the S&P 500, let's do this. Let's put the S&P 500 up. And the S&P 500 has like 27 sector or 26 sectors, something like that. They have a bunch of sectors. So, in other words, you have oil companies, and you have oil drillers, and you have electronic companies, and then you have, food staples companies, and you have clothing companies, and you have manufacturing type of companies, and they have these different sectors, and it makes up the whole index. The oil, the power of oil is enormous, and we see it in its unnatural volatility that we always see. In other words, it's nothing for oil. Imagine if you had a $100 stock, and one day it's trading at 100, and then it climbs to like 117 in 2 or 3 days, and then falls back down to 98. That's pretty volatile. That's a very volatile product. And so when looking at energy and the oils and drillers and all that stuff, and the refiners, when you look at that sector in the S&P 500, the S&P 500, that sector is 2+ times bigger than the next two. So it's the number one sector in the S&P 500. And at the same time, it's so big that it is 2 times greater than the next two, which is enormous. 2 times bigger? I guess it's bigger than the next two. That's what it's not 2 times. It's bigger than the next two sectors. So you put the second most active and biggest sector of the S&P in it. You take a look at that sector equity-wise, asset-wise, and you look at the third largest sector in the S&P 500, and you put those two together, and the oil energy one is still bigger than those two. And that really screams to you how much oil is an influence to our world. And you almost wonder what kind of anger or frustration or ideas, philosophy you have when your country becomes energy independent and you take power, in the executive office, and you stop that instantly and become an importer instead of an exporter. That is really, you have to assume in a world like ours that how much that is a risk to take, that you're willing to buy oil from different countries that are taking that money to hurt you at the same time. It reminds me of Joe Stalin saying that, I think it was Joe Stalin said that, it was somebody in the Soviet Union who said it, a good capitalist will sell you the rope that we will hang him with, 2 days earlier. So this energy problem, it sounds like, Mr. Biden needs to get ahead of it. And he's really having a hard time do that. He really hasn't been able to get ahead of the problem and get us back to being a major exporter. And supposedly, as I said, 5 or 6 times before, Mr. Biden is in Europe, and I believe he's going to be telling them that he is going to find natural gas for them. I think he can get away with that. I think his side of the political spectrum will put up with that. They won't put up with anything else, but I think they'll put up with that. And that alone could really rocket the markets on the upside. All right. From there, let's see where to go. Let's go take a look at, and I thought that was well worth knowing, is that oil is that important in these indices. Now you can see here's the Dow Jones Industrial Average. It closed in a sell yesterday, and it is trying to climb up at the moment. But still, as you see, it's minus 1433 still over there. The weekly is holding up. It's not being backed off, so this is just short-term noise. And I would imagine it will try to come challenge some of this area here. There's the all-time highs. Let's show you the all-time highs. I thought it was over here that they did the all-time high, but I guess something seems odd. Let's take a look at it on J4X. I could have sworn the all-time high was later, but I might be thinking about the Russell 2000. There it is, right there. Let's make it the whole page. Yeah, so okay, there's January. Yeah, so that must be the all-time highs. Okay, so that is the all-time highs right there at the end of December. And so it wouldn't surprise me if we found a way to, get up in here somewhere. It's amazing that it's able to do that when you have the world almost on the edge of their seats with this conflict in Ukraine. So it is amazing that the whole world economy, seems to be like, I don't know, it seems to be fighting to be plus. And it could be the quantitative easing doing it. I mean, honestly, wouldn't it be smarter for money managers to just sit on their hands and do nothing? Throw some collars on, option collars, a collar or something where you sell the calls and you buy the puts, use the premium from one to the other. You're not really making any money, but what you're doing is you're guaranteeing no matter what they do to the marketplace and the world economy, you will have your assets. That's something the Chinese should think about a little bit harder. And at the same time, you would assume that that's what money managers are basically doing. Is they're obviously they're always looking to buy something because that's what they're done. That's what their job is to do, is to take the money that their investors give them and go and invest it. So that means buying it mainly. So you can see there the Dow, showing its mild weakness, nothing major. You can see on J4X how it's trying to curve down here, like that, and it might just find a way to bounce back up. We'll see how Mr. Biden does, in Europe. If he's kept under wraps and not given a chance to speak too much and just say yes and no and look like he's a little bit more coherent, that could be a very positive thing for the Ukraine people. And it seems like that's what they did. Now, the head of NATO spoke, and then everybody thought that Mr. Biden was going to get up and address them, and he ended the meeting. So that's a good thing. Let's not push Biden to do things he doesn't have the ability to do. I mean, he can make the decisions when given an opportunity, but overall he's not exactly the best communicator, and he most of the time they have to back off what he said, and in the White House and so forth. So if they keep him under wraps, this could be very positive for the whole war in Europe. Because if he just says, yes, I'm writing the check. Yes, he's writing the check. That's it. And we all know that he doesn't, but if he says he will, then he can go to the Congress and get them to write a check. Maybe they will. More than likely they will. So, all right, that is about it, traders. We've had a fun-filled day here. It's been a real quiet day. And we will catch you all on TGIF, which is tomorrow. Thank goodness it'll be Friday. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. See you later, traders. Catch you Friday. Over and out.